Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, August 23rd, 2014, and this is the weekend edition. Okay, so on the weekend edition, we're going to look at some weekly charts, a few of them here at the same time. The Dow was up yesterday, actually was down yesterday, 38.27 points. So first day in several days, and we've had a heck of a move that we've seen in here. This rally back. It's almost like no buy stops will go untouched. Maybe I should have that as the name of my post. I'm not sure, but anyway, that sure seems to be the case in terms of the way it's rallied back. Let's look at on a weekly basis. I was doing some work. Okay, and here, I'll get back to this arrow. I'm going to talk about that later. This bounce back, nice big bar. We were up, 338 points for the week. You can see that right here, 338 points for the week. And so we're back up here, did not close at new highs like the S&P 500 has and the NASDAQ has. So it'll be interesting to see if we continue to lag, roll over, or whether we follow what those guys are doing. Step back to the daily here for a minute. Take a look at the. Well, here's the RSI. The RSI has bounced back up, but it hasn't pushed to highs in here, which, of course, the price hasn't gone to highs. DI plus is greater than DI minus. The demand index has gone positive. So either this is, right now, let me blow it up a little bit. Right now, I'm counting this as potential 5 waves down in here, 5 small waves, which would make this minor wave 1. If that's the case, then this is minor wave 2 back. Now, if it takes out this high right here of 17,151, then we've got to sit back and say, okay, that's not the correct scenario, and therefore we have to revise and check. And a lot of this is because of, this kind of action, this big diagonal wedge that we had here, which is a lot of times an ending diagonal type look to it. The fact that I think we've had 5 waves up and that we're looking to correct. But we could, as I've said before, when you get into corrections, if we are in a corrective mode here, a lot of times they can become very complex. S&P 500, I'm going to look at the daily first, and here's a good shot of it, how it's bounced up here. When we last talked, Wednesday, so we had Thursday, Friday of action. Okay, so this is where it moved to the all-time high on Thursday the 21st, and then yesterday pulled back. How is the indicators looking? It broke this trend line. It's a little hard to tell because, in terms of the previous high here, it's definitely gone beyond that. Okay, but has it gone beyond these? No, it hasn't. But, right now, I would say it's in bullish mode. There's no real sign. If I had to look at the way this RSI is acting, I mean, it wouldn't be surprised to get another up day out of this. We'll see. I mean, it's let's take a look at the weekly. And the weekly chart, are we closing at a new? I think we are. This was 1985.44 and we're at 1988.40. So yes, we're at a new all-time high on a weekly close too. So and then on the, now here's where you're getting some divergence. Okay, so we got the higher close, but it's not even close to that on the RSI. So let me draw the little trend line in here, and we'll see if it holds. But right now, it's not. As you can see, I'm talking about between these 2 points. On the demand index, it's the same type of thing. It did not go to a higher demand index reading. 27, and this is 28, so it's just 1 point shy. All right, so let's take a look at the NASDAQ on a daily basis. The NASDAQ's right up here. Remember, I had this 45.35 written in. It's right 45.38, so we're right in here. Little doji bar Let's blow it up, make sure, it's kind of a doji bar. It's very small body between the open and the close. And it did close higher, and it was up 6.4 points for the day. So if it continues to push, then as I've said before, my next threshold is this up here. Okay. And if we're counting, well, it's hard to tell on here. I mean, you could almost see 5 little waves in here, but it's a little hard to tell. You know, I'm gonna have to go down to an hourly chart. On a weekly basis, you know, we've had this divergence on all the indicators in here between this point and this point, from February or 1st of March type thing, March 7th, to this point here on July 4th. We're getting divergence. We got a little bit of sell-off, and now we're back trying to push again, but we're not. I mean, again, this divergence is being confirmed. So again, on a weekly, it's showing up that the price is not being confirmed, just like the S&P 500 is. Let's see. Okay, then the other one I wanted to look at is New York Composite. This is back up into this overhead area. Okay, you can see all of this. You know, all of this stuff, you know, you have a tendency to draw a line through it, and that's about where we're hitting resistance. You know, when you start to ballpark stuff and you start to think about, okay, where could resistance start to come in? And, you know, you can get a little more exact than that, but that's pretty close. Let's take a look on a weekly basis. Pretty sure I have the weekly New York Composite weekly. There we go. Yeah, of course, this is a clearer picture of, you know, where it's running into that type of resistance there. And we're not getting divergence. This peak did not show divergence as strongly as it did on some of the others. It's interesting. You notice here's the other thing, and I think I've pointed this out before. When you look at with the RSI, a lot of times when you're in a bull mode, excuse me, the pullback comes back into to 50 or into the 40s, maybe slightly below. Where is this? 42. And this one is 45. And this one is 46. This one is 46. And here we're at 47. So a lot of times that's considered to be oversold when you're in a very strong bullish mode and all the moving averages are aligned. So that's something to think about. I mean, that's not just on a weekly chart. I mean, that's on a daily chart. It'll work on anything. So just a little pointer there. Okay, let's see. Let's take a look at some of the ETFs. Semiconductors. Wow, it's continuing to do the same exact thing it's been doing, continuing to push higher, although it was not very bullish on Friday, but it wasn't down. It was, well, it's almost unchanged, up 0.07, a little doji bar. But almost looks like we've got, let's see here. I don't know. I have not spent time trying to figure out any kind of wave structure on this one. Whatever it does, looks like it's extending because, I mean, it's just, you know, continuing to just stair step higher. And I just haven't spent any time trying to do an Elliott wave analysis of it. Let's take a look at the semiconductor, the indicators here. Well, you know, you got all this bearish divergence in here on the RSI as you approach this top, and we haven't come back up even close up in here. Demand index, or the DI plus is greater than DI minus, and you know, you had this big divergence here on the demand index, and then it pushed higher. So not seeing anything that says, you know, that it's running into some kind of bearish divergence at the top there on a, you know, couple of week basis. All right, let's look at the home builders. Okay, let's see. Home builders have snapped back. This is really interesting that it gapped on, when was that? On the 19th, which was Tuesday. So I had this gap up on Tuesday. Not quite sure what to make of it. Looks like we almost have 3 waves down here. We've had like an A, B, C. We could be, trying to go off. And then of course, you start working your trend lines. What I highly recommend is that you're always looking and trying to see potential trend lines, support, resistance, that type of thing. So as I look at this, I sit back and think, well, okay, here's a potential bullish trend line that if broken would mean, on at least trying to test the prior high, if not going on to new highs. So we'll see if it goes up and tries to challenge that. You've got this gap in here that it's trying to close. Okay, so it came very close to closing it this week, and that may be all this is trying to do. If we get a gap back down, you could have like a little island top. Okay, but I don't know. I mean, usually I like to think about those when you're truly at a top, not down here in the middle of something. So we'll just have to continue to watch that. The XLF, the financial really continued to push higher this week, pretty strong. And we're up here at, at the upper end of the RSI, the overbought. And what is the ADX? ADX is 23, so the ADX is above 20. It's not rising yet, but it's, still in that territory where this could turn into starting to trend. So this is kind of interesting. The market's not, this is not leading us down, okay? And the semiconductors are not leading us down. So that's where you kind of get torn with, you see some things that are, bearish, and then you see some other things like this where you sit back and say, well, these guys are acting like, everything is, green, got the green light. Okay, and the next one I wanted to look at is the high yield fund, just for grins to take a look at that to see how it's bounce back. Where is it? Probably got my, well, let's see. Oh, here it is. High yield bond fund. Okay, one of the things I did here was I looked at the retracement. We're very deep into this retracement, and that of course is assuming that this is the move down and that we're retracing bounce back up. That may not be the case. This may be the corrective move, and this may be the beginning move, but be that as it may, it's almost a 78.6%, which is the next threshold beyond 61.8 that I look at. So this has had one heck of a rally back, and of course there was an extreme divergence in here between this point and this point. So we'll have to keep an eye on that. I'm going to start watching that on a regular basis. Let's take a look at our indicators. I like to start off the short-term trading index. It's bounced, the 10-day has bounced back up a little bit, so it's not continued to move down to an extreme. The 10-day is at 1.00. The VIX is continuing its move down. And now we're starting to get back down into this territory we're in June and July, okay? And so this is interesting, but again, no signal that I can see. The high-low index, this is also interesting. Okay, remember I talked about these M-tops? Talked about this on Thursday, I believe it was, or Wednesday. Well, looks like we got a little M-top, and we pulled down. So sometimes you get this little, what we call a little fish hook on this M-top, kind of like this. Pulls down and it pulls back up, creates like a fish hook type of look to it. But this is going to be interesting to see if this is a sign that this is a short-term top, and then we turn down. So again, there's a little signal that we're getting, something to kind of be aware of. All right, now I want to spend a few minutes talking about the put to call ratio, and then we're going to be done. I'm going to go back to the Dow. And I haven't been looking at the put to call ratio, and I just mentioned that my data provider does not I'm not able to access and put it on a chart like I'm on short-term trading index. I may be able to I should be able to figure out a way to do that, but right now I've got it in a table. So what I'm going to do is I'm going to pull this table over, okay? And I'm going to tighten that up a little bit. And what we're looking at is June, okay? Here's the dates, okay? And what I've got in here is data from the Chicago Board of Options Exchange. And so this is put to calls ratios right in here. These are the daily ratios, okay? What this last column is the 10-day moving average of those days, of those ratios. Okay, so a lot of times what you need to do is you need to smooth it out because you get a lot of extremes. So we're looking at 10-day. When you get into the 50s, into the 0.5 something, okay, you're starting to get very bullish. And when you get below that, down in the 40s, you're getting extremely bullish readings. And by bullish, it means that there are a lot, you know, in terms of calls bought versus puts being bought. And this reading here in the 30s is very, very extreme. So what this means is that the bullish frenzy is happening, which is kind of happening near the top, and that means that it could have bearish implications, if you follow what I'm saying. Okay, this is a kind of a counter trend signal is what we're looking at here. We're looking at sentiment type indicator. So this is a sentiment indicator, and I'm looking for extremes. We got an extreme reading on June 18th, okay, that day. And this 4-day very extreme reading was in this sequence right here. Well, notice how it was several weeks, few weeks before the top that we had, and then we got this pretty dramatic sell-off. Well, you think, well, okay, that's cool. Well, what does that mean? Well, the only thing you can try to do is put it in perspective. And when I go back and I looked at January, and let's go look at the January top, we started getting some extreme readings here too on individual day basis. But, you know, the January, and I'll pull that back up, hopefully. The January sell-off that occurred in here, we got these extreme readings, but we never got nearly as extreme as what we had in June, okay? And when I go back to this in here, this is the most extreme reading in 3.5 years. And this is the most extreme 10-day reading in 3.5 years. And so that's really, really interesting. And so I think what it's telling us, and the other point that I found out when I went back and did some research back through 2007, even though 2007 was a top, we were not getting even anything like these kind of readings, these bullish readings. And there's only been 2 other times since 2007 where we got something like this. And it was in April of 2010, you know, a few weeks before the flash crash that we had in May of 2010. And then we got very extreme readings in December into January, December 2010 into January 2011, as we were leading into that top before that huge financial crisis. So here's what I'm talking about. December into January, we get those extreme readings, and then we led into this top, which then led into this whole thing when we were going through that whole government conflict and our debt being downgraded in August by S&P and all that good stuff. And then back when I was talking about April of 2010, that's right in here where we were getting all the extreme readings right before the flash crash. So those are the only other 2 times where we've had extreme readings like that, even all the way back to, you know, 2007. So I find that pretty amazing, because you would think that there would be extreme bullishness up here at 2007 at these twin peaks up here at July and October, but there wasn't any. There wasn't anything at all in here. So what that makes me wonder is about the extreme bullishness that we are seeing in this move, and it could be tying into the type of bullishness that people talk about for year 2000 at the top, at the peak. So I haven't looked at the data back to then, but it would be interesting to check that out. So anyway, that's it for today. That's the market update. If you found this video helpful, please share it on social media. And again, subscribe. If you're not a subscriber, just click on the little red box here and download the PDF. You'll be good to go. And if you're watching this anywhere besides my website, head on over to joehenches.net. Check it out. We've got a bunch of other things over there. So that would be great. All right, everyone. Have a great weekend. I'll be back with trade ideas. We'll take a look at them tomorrow. This has been Joe for Beyond the Chart.